It is moving, madam.
Yes, it is moving.
My voice is audible?
Fine, so fine.
Okay. Thank you very much, ma'am. So, good afternoon to all. Yesterday, I discussed at length the bank guarantees that are issued by the commercial banks to the various corporates, and whenever they are issuing, what type of securities they are taking, what is meant by cash margin. And in the end also, I discussed about how the RP or IRP they have to handle with regard to bank guarantees. All these things I have discussed in detail. The bank guarantees, as I told earlier, it is a contingent liability. It is not displayed in the particular balance sheet of the neither bank nor the corporate data. But being a IRP or RP, how many bank guarantees are issued by the bank or financial creditor? At the same time, how many bank guarantees are taken by the company for various purpose, for purchasing of the raw material, or in case of construction activity, the infrastructure, they will take a number of bank guarantees. For each bank guarantee, they will give some margin, at the same time collateral security also. The bank guarantee may be 1 month or 15 days in case of customs and customs authorities, they will ask some bank guarantees while releasing the goods till that documents of the corporate debtor arises. All these things are there. Deferred payment guarantee and some of the guarantees after a certain time, the guarantees are to be they matured. Once matured means bank will return the security as well as the cash margin or margin money. All these things are to be looked into by the resolution, interim resolution professional or resolution professionals. Now today I will discuss about the debtors or account receivables. The debtors or account receivables are also the CD's assets. The corporate debtor assets, because today, if at all no credit sales, sales of the organization will not arise. Once the credit sales are there, definitely the company's sales will increase. And every organization, they are giving the credit sales that is called debtors. If at all the debtors are supported by the bills of exchange, account receivables, or bills receivables, etc. And these receivables are for certain time. While giving the credit to the borrowers, to the particular buyers, the company will verify the credit worthiness of the buyers, either through the rating agencies like a CIBIL or CRIF Highmark, etc. But also the various other modes they will verify, and then only they will give the credit. On maturity, that amount to be paid by the buyer or debtor to the company. Sometimes, if a delay was happened, the interest is also to be paid. It depends upon the credit agreement between the seller, that is corporate debtor, the buyer, the debtor. So here also the funds are blocked, and some of the companies or corporate debtors, they will approach the bankers for a temporary lending purpose. That is called discounting of trade bills or bills discount facility, or some other companies they will approach the factoring also. In India, the number of factoring private and private factoring companies are there, like SBI Global Factoring or Ken Factors or PNB Factors, like that. Not only that one, that particularly the debtors after 30 days or whatever the credit period allowed, 60 or 90, the companies, they will file a suit against the debtors if the amount is not paid by the debtors in time. So for that, the security is nothing but bills of exchange. Bills of exchange is defined under Negotiable Instrument Act 1881 also. The Negotiable Instrument Act defined three instruments: check, the bill of exchange, and the promissory note. So this bill of exchange also covers under the Limitation Act. That is section 18 or 19. 18 is a part payment of debt and acknowledgement of debt, and the second one is a part payment of debt. So here the debtors are also assets. But to my knowledge is concerned, some of the few of the particular IRP or RPs, they are not giving much attention or focus on debtors. It is also realizable, like it is also an asset. It is a current asset because the assets which are to be converted into cash within one accounting period, in the debtors, the bad debts are also there. For that, the company will provide provisions also. And at the same time, if the company require fund, they will go to the bank, and on debtors also they will take the finance. That is called working capital. Working capital is stock and receivables of finance. Receivables finance. While giving the working capital for the receivables, the banks are also taking less than 90 days bills receivables also. 90 days. If at all debtors are more than 90 days, the probability of chances the recovery is very, very bleak. The probability of chances of recovery is very bleak. That's why they will give only 90 days, below 90 days debtors only they will take into account, and accordingly they will finance. But what type of a charge is created by the banks they are asking means, that is called assignment. In case of stocks, hypothecation. In case of debtors, assignment. So once assignment is given, once the company is in financial troubles, the banks will directly write a letter to the debtors, and they will recover that amount. And today, instead of a working capital, the companies are also going for commercial papers. That is also one type of the liability that also you have to handle, commercial paper, and factoring, forfeiting, and not only that one, the bills finance they are getting from the banks. Not only that one, TREDS, trades are also there. Why we are discussing all these things means, whatever the assets are there, in case of liquidation or in case of CIRP, whenever you are preparing the information memoranda, all details of all assets to be given, provided to the prospective resolution applicant in a detailed manner. Otherwise, if at all we are missing that assets, later on if that the prospective resolution applicant recovering that amount from the particular the debtors, then the creditors, particularly the creditors, are losing the money. So maximization means every asset we have to target, we have to include either in a resolution information memoranda and through resolution plan to encash that one. And in case of liquidation, we have to sell. So that's why today I will discuss about in detail up to 5:30. As usual, 4 o'clock, 4 to 4:10, we will break for tea break, and 5:30 we will wind up. This is in brief about today's discussion. Only 1 minute, I request your time. 1 minute, sir. Okay, sir. Now coming to the subject, I will discuss about debtors or accounts receivables or bills receivables. And the second one is how to handle the debtors or account receivables during CIRP or liquidation. That also I will discuss. Discounting of debtors or the receivables through factoring. The factoring services are also there. The corporate debtor, they will sell, they will discount this debtors or bills, account receivables or bills receivable with the factoring also and forfeiting also. In case of foreign bills, forfeiting. Not only that one, in commercial papers also I will discuss. The companies, particularly they are going for commercial papers, that also I will discuss. And not only that one, the bills discounting facility, limits with the banks, all these things I will discuss in detail. Sir, the PPT is visible, sir, clearly? My voice is audible, sir? Somebody has to confirm.
Yes, sir.
Yes, sir. Yes, sir.
Okay. So all these things I will discuss because commercial paper is also one of the important one. Today, to meet their working capital, companies are going for commercial paper. But if the company is in trouble, that too, the CIRP is there. The IRP or RP has to handle how to handle the commercial paper, how to handle the trades, how to handle the business discount facility or limits with the bank. All these things, factoring or forfeiting, all these things are the discounting of the debtors with various avenues are available to the corporates. All these things I will discuss in detail. Now coming to the accounts receivables or debtors, I will discuss in detail. What is the difference between a debtor and the accounts receivables? Both are different. Today, the companies are selling their products. The companies are selling their products on credit. Without a credit, sales will not increase. Any company. Take for example, More, Super Bazaar is there, MORE, More. In the More, whatever the floors are there, all floors, the ground floor is provisions or oils or cosmetics. Second one is electronic goods. Third one is the clothes. Fourth one is different items are there. Consumer durable goods. All are the credit. The buyer is getting that stock on credit on. Today, Amazon. All companies, they are providing Amazon and they are sending their products on credit. If these sellers are facing the problem of CIRP, how to handle. But what is the difference between a debtor and a receivables? If the company knows the person who is a buyer, the credit worthiness, they don't insist any promissory note or bill of exchange. Once the seller is, the buyer is asking the goods, immediately they will send. Why? Because the reputation of the company. Take for example, Amazon is there. I am manufacturing one product. My company is manufacturing some consumer durable goods or fast moving consumer goods. And I asked the Amazon, sir, in your net, particularly Amazon site, please sell my products also. Okay, we will sell. You send the product features and photographs, and once you supplied the goods, instantly you will not get the amount. You have to give the credit of 30 days or 45 days or 60 days, depending on the type of the product and how it is moving, sales are moving. Then no, sir. If you give the cash, then only we said in that case, Amazon will not accept to sell your products. Okay, the company is ready. The company is ready to give the credit, but here immediately the corporate debtor, the company will ask the Amazon, okay, sir, I will provide 10 crores worth of stocks to you, and please give bill of exchange. No. I don't give any bill of exchange. But I will acknowledge the goods, and whatever the corresponding, that is a proof that I have taken the goods from you. So based on the reputation of the Amazon, the company waived the bill of exchange. But one buyer interested to buy, but the company is not having full credentials of that particular the buyer. Immediately the company will, the corporate debtor will ask, I will supply the goods on credit 30 days or 60 days, but you give me the bill of exchange. Bill of exchange is nothing but like a promissory note in trade. Then once the corporate debtor is preparing the bill of exchange, the other end people, particularly the buyer, he will accept and he will mention that number of days and other things. Then these account receivables are useful to the bank, the company, to discount with various financial instruments. That is the difference between the debtors and account receivable. Indian companies are generally follow comprehensive internally defined credit control policies and procedures for sanction of account receivables data from the credit sales. Why we are talking all these things in CIRP or IBC? Because you are going to handle the company. Whatever the asset side are there, whatever the liability sides are there, if you know perfectly, then during CIRP process, how to handle these assets, how to handle the claims, all these things you will aware, and it is very easy for you. If at all I don't know the ABC of debtors or ABC of account receivable, ABC of commercial paper or ABC of trades or ABC of bills, what is this? Doubt will arise. So being because you are going to handle the company and you are an all-rounder, particularly you are the CEO of the company, of the different company, and you have to interact with the particularly the production department, marketing department, HR department, finance department, whatever their issues are there, once the board of directors are not there, the issues will be escalated to none other than the IRPRR. None other than IRPRR. And if at all higher, that's why if at all going concern, once the going concern means you should be aware of all these things. Then only the company will continue. Otherwise, it is a problem. Once the activities are stopped, then the value maximization will not arise. So here, the Indian companies are generally follow comprehensive, internally defined credit control policy. They are giving credit. All cash sales is not possible in all companies. Cosmetics, oil companies, or particularly pharma companies. Take for example, pharma. They are manufacturing tablets, they are manufacturing. And if they are not giving any credit to the buyers, that is dealers or wholesalers, the products will not move. Wholesalers will ask 30 days or 60 days credit, or the shops they will ask 30 days, 15 days. So cash and carry sales is not possible in any company. In any company. Whether it is a pharma or a textile company or sugar company or iron and steel company or even today infrastructure company. Cash and they once the road is constructed, they have to submit the bills. They have the government will take their own sweet time and all these things. In the meantime, it is an asset. It is they will take some, like in case of fast moving consumer durable goods, they will take the bill of exchange from the buyers. Well, there is no single mandatory guideline for all commercial credit sales, unlike banks, NBFCs, by RBI. Once the banks are giving credit to the public by way of loans and advances, the stipulations are the Reserve Bank of India. But in companies, there is no stipulation. There is no guidelines from Ministry of Corporate Affairs. And the process are standardized across the industry to manage the risk, ensure steady cash flow, and comply with the accounting standards like Companies Act Schedule 3 requiring classifying the receivables. There is no your creditors should be like this, you should not give more than this, and whenever you are giving, you have to charge interest. Like that, that is no instruction. But once the debtors not recoverable, you have to provide a bad and doubtful debts provision. But here, the accounting standards are to be fulfilled. That too, Companies Act Schedule 3. Key steps and practices that are followed by the Indian companies. What are the various steps that are followed by the Indian companies? Whenever they are extending credit to the buyers, the pharma, they are manufacturing the goods. Immediately they will sell and they have to offer the credit. Then only the goods will not sell. Today, almost all organization, the credit sales are more than 90%. But these credit sales means it is an asset to the company, even though it is a sale. But once it is a credit sale, it is an asset to the company by way of account receivables or debtors. That asset also to be properly realized by the IRP or RP. So what are the steps that are followed by the companies? Establishment of formal credit policy. Suppose you have handled one IRP, the CIRP cases. In the balance sheet, nearly 100 crores debtors are there. How you are realizing? Debtors means no physical, only the credit sales. Like a plant and machinery, building a land, that title deeds are available with the company. But a debtors or account receivable? No. So why 100 crores or to how many people the company has sold the goods on credit, whether they have taken the account receivables or not? And what is the due date? Whether they have paid on due date or not. If not, what the finance manager is doing? And in the meantime, if the company requires fund, whether these receivables are taken any finance from the banks or not. All these things are known to the IRP or RP, or in case of liquidation, liquidator also. For that, every company, they are having credit policy. Whenever they are selling the goods on credit, they have to follow the credit policy. The credit policy will be finalized by the board of directors. The credit policy designed by the company and is approved by the board of directors. Then only the marketing department as well as finance department, they follow the credit policy. Otherwise, a simple company will not give any credit unless until there is a policy in this regard. The company created a documented credit policy that balance need sales growth with the mitigation of credit risk. Whenever the companies are selling goods on credit, who is the buyer? What is his credit rating? How long he is with us? How long he is with us? And what are the earlier sales? Whether he paid in time or not? All these things are to be verified. First, as an IAP, only 1 minute, sir. I will take some water and come. So, whenever you are verifying the data, you have to read the credit policy of the company. So, the companies create a documented credit policy that balance the need of sales growth with the mitigation of the credit risk. Even company, whenever they are selling the goods on credit, some goods, some sales will turn into bad also. That's why the companies are providing bad and doubtful debts. Credit policy. What is a credit policy? Credit standards and eligibility, minimum criteria for the customer to receive the credit. So whenever the companies or marketing team, they are extending credit, they should know about this one. Based on this only, they have to extend the credit. What is the credit limit? The maximum outstanding amount allowed to each customer or the group of customers. The company, the corporate data, they will sell the goods to other corporates also. But this, particularly this company, output is the input to the other companies. So for each and every company also limits are fixed. Suppose I take for example, oil industry is there. Whenever they are cooking oil, whenever they are supplying to Amazon, maximum Amazon, we will provide a credit that to 30 days and amount is not exceeding 2 crores or 3 crores like that. Like that other, particularly big hotels and all these things. So here are the super bazaars. Suppose the Reliance Fresh is there. The oil manufacturing company, they will extend the credit to Reliance Fresh. Or Star Bazaar, the Godrej company, the super bazaars. For Star Bazaar, we will provide a credit of 10 crores worth of oils by the oil company. Like that, Reliance Fresh. So all these credit, particularly here, the credit is inevitable. That is a big asset of the company. That is to be properly addressed by the IRP or RP during CIRP and liquidation. And credit limits, maximum outstanding amount allowed for each and every customer or the group of customers. The credit period terms are normally duration of the credit. Star Bazaar, we will give 60 days, or other company 90 days, or other company 30 days. So all these things are defined in the credit policy guidelines that are approved by the board of directors. And this policy will be circulated to both to the marketing department as well as finance department. Marketing department, whenever they are selling, they have to extend the credit. For that, they should know about the credit policy. Finance department, after marketing is over, they have to recover the amount on due dates and specify the payment conditions. Some payments, okay, we will provide credit, no problem. On receiving the goods, 10% cash, remaining 90% 30 days, or 50% cash. All these things are defined clearly in the credit policy. Late payment penalties and early payment discounts also agreed upon the charges for overdue payment or incentives for early settlement. Late payment. Suppose Star Bazaar, they have taken, the company has given the 30 days credit for various products that are manufactured by the corporate debtor and sent to this one. And Star Bazaar, 30 days they have not paid. Or Reliance, 30th they have not paid. In case that is not paid, what rate of interest to be charged? That also defined in the credit policy. But some people, even though 30 days are given, they will pay the amount before 30 days. Then a company credit policy clearly defined about the discount also. Those who are paying the early discount, those who are paying the late, the interest. So agreed upon the charges of overdue payment or incentives for the early payment. All these things are defined in the credit policy. Collection procedure. Once the goods are supplied, the collection team, which are under the control of the finance department, they will closely monitor and due date wise, and before 3 days they will send the alerts. So we have supplied the goods before 30 days, you have to pay the 30, we have allowed 30 days, and the next 2 days only the 30 days will complete. Please pay through RTGS or NEFT to the company's account. So the TLC team also continuously chasing. But this type of system is there in the company or not, if at all the company is a going concern. In the similar type infrastructure projects, particularly real estate project, if it is a going concern, the finance department as an IRP or RP, you have to ask, have you collected the installment from the home buyers? If the construction activity is going on as a going concern, and due date of installments, and the RP has to hand over the flats also. The RP has to register the particular the flats to the prospective home buyers. So the collection team is also there. The collection team is there for real estate. The collection team is there in other companies or industries also. Steps taken or initiation taken by the overdue accounts. How they are taking? Credit assessment and approval. Whenever any buyer is interested to purchase the goods and he is asking about the credit, the companies are to be assessed. What is the reputation of the company? What is the rating of the company? Whether CRISIL or ICRA, or what is the CIBIL score? All scores they will verify, and if that is a reputed company, and whatever the promises they are going to give, if they adhere, the company will continue to provide the goods on credit. Before extending the credit to the new customer or an increasing limit of the existing one, companies conducted due diligence to assess the creditworthiness. Creditworthiness to be assessed properly. Otherwise, simply whoever is asking a credit, the company is in doldrums. Today, the company, on account of liquidity problem, they are unable to pay to the financial creditor. At the same time, if their particularly loans taken by from the corporate debtor, if the particular person is not paying, this is a problem to the company. So that's why the credit assessment and approval is also the part of the credit assessment. Like banks, whenever we are giving loans, we will appraise the loans and the rating of the company, CIBIL scores, whether it is a commercial or individual. In the similar manner, the companies, while extending credit also, they will follow these guidelines. Due diligence and the process of debtors and account receivables. Whenever the companies are giving credit to the other companies, the goods supplied or services, not only the goods, services also. For that, immediately the seller company, that is a corporate debtor in our case, to the buyers, first they will ask the financial statement analysis. They will ask the financial statement, and the seller will analyze the financial statement, whether the health of the particular buyer is good or not. Health of the financial, health of the company, that is a buyer company, is good or not. If it is healthy, then only the company will pay, extend the credit. Reviewing audited financial statement for large corporates to evaluate the financial health. The financial health position of the company is very much required. Credit checks. Utilizing the services from credit rating agencies to get customers the credit history. Sometimes we are analyzing the financial statement of the buyer, but at the same time, we have to check the rating agencies. Today, every company, they are having a external rating and internal rating is also there. These rating also the verified. Otherwise, if the seller is selling the goods to the buyer, if these are not followed, then the whatever the assets that are mentioned in the balance sheet of the corporate debtor, no use at all, no recovery, nothing. So once all these checks and balances are there by the corporate debtor while extending the credit facility, why IRP or RP is not properly handling the debtors or receivables of the particular company? Always today, some of the IRP or RP, they are focusing on buildings are there, or planted machinery is there, or lands are there. All these things they will verify. But some of the people, particularly I observed through my friends, so known friends also, they are not bothered about debtors. They are not bothered about accounts. Who will pay, boss? This is a defunct company. Who will pay? Are who will pay means then whatever the bill of exchange they have given, file the case. File the case, recover that amount. Then automatically it is value maximization. If at all I am living like that, later on, the prospective resolution applicant who is going to take the company, he may recover also. It is like a, if the resolution professional is not bothered about one asset and not mentioned in the information memoranda and hand over the company, later on the prospective resolution applicant, they will take over that asset and he will use that asset without paying any money. Like that, debtors and account receivables. Today, there is a big market for this. You can sell that debtors to the trades also, trade receivables and discount scheme. And the some assets which are instantly not sellable, that also market is there. Check credits, utilizing the service of the credit rating agencies and get the customer's history and credit also. Next, trade reference. Sometimes whenever the company is giving any credit to their buyers, they will ask the existing buyers. Sir, he is asking 3 crores credit sales. So how is he? Whether he is a good standing? I have verified the financial statement and all these things. What about your opinion? Then they will get the information from trade reference also. Once these process they are handling, why we are leaving that amount like that? In that particular amount also, lot of recovery. Hello? In that amount also, lot of recovery will happen. So the trade refers obtaining reference from other suppliers who have previously dealt with the customer. So whenever the company is giving credit, that company is facing problems, the ARP. We have to focus on this area also, the debtors or account receivables. Internal payment history. And for existing customers, past payment behavior is the key indicator. Every month, the 30 days, I am supplying goods on credit to XYZ company by the corporate data on credit, regularly paying. If at all he is asking a higher amount also, the company is able to pay. If they are not paying on due dates, the company will stop further sales, credit sale to those companies. So here, the internal payment history, that also to be verified. That also to be verified. Approval process. The credit limits and terms and sanctions of the appropriate authority. Whenever credit sales are given, it is not the marketing department authority. It is a finance department authority. The marketing authority, they have to get the approval from the finance department or the chief financial officer if the amount is credit sales are increasing more. And the credit limits, terms and sanction appropriate authority, often finance manager or chief financial manager or a dedicated credit department and not left solely to the sales team. So it is not the discretion of the marketing department. So this type of a process is there. If that company turn into bad and facing facing the problem of CIRP, that debtors and receivables, lot of recovery will happen. So whatever the physical assets that are seeing by the IRP or RP, you are targeting, not targeting about this one. Yesterday also bank guarantees. Once all bank guarantees are expired and no development, then the securities are freely available with the bankers. The margin is also available if the bankers take back that amount and use for a payment of the claims. In the similar manner, once the IRP is recovering the amount from the debtors or receivables, that amount you use for paying the claims. paying the claims. So credit limits or terms are sanctioned by appropriate authority, often finance manager and a dedicated credit member, and not left solely with the sales team. Documentation. So whenever I am giving a credit by the company to the others, I will say I will take the bill of exchange or some document or invoicing or whatever the bill of lading or the railway receipt or the lorry receipt or whenever I am providing, I am sending the stocks to that particular company, and I will take the acknowledgement from the particular company. And whenever he is ordering the goods, purchase order, all are documents only. In the similar manner, when this corporate debtor is purchasing goods on credit, that creditors, the similar manner, whenever you are doing the creditors or claims are entered properly, that is operational creditor, and you are the corporate debtor is an operational creditor to the other company. But for corporate debtor, the others are the debtors only. So the company is extending it. Once the claims are received means the company is borrowed. But at the same time, company is extending some credit to others. That also to be recovered. Not only the physical assets like that. In this case also, documentation. Whenever company is giving the credit to the other companies, they will take documentation like a bill of exchange or the invoice or some agreements, etc. The process is emphasis clearly accurate documentation to prevent the disputes. Now, first, the letter to be originated by that particular buyer. Sir, we require 10,000 goods and the purchase price is this one. We require this quality like that. That is called purchase requisition. Based on the purchase requisition only, the company will supply the goods. Once the goods are supplied, before that bill of exchange to be signed by the buyer. The bill of exchange is a stamped one, and the invoice also. The invoice to be sent, invoice is to be acknowledged that the goods are received intact and without any damage. And whatever the title, the transport document, like if the company sent by lorry or railway or the sea bill of lading or by cargo, all the document. And once the goods are received, the stores department, they will give the acknowledgement by mentioning the detail of goods, all these things. Only 1 minute, sir. Only 1 minute, sir. Sir. So the documentation is also very, very important. Once a documentation is there, once he is not paid, then these documents are useful for the corporate debtor to recover the amount through the courts also. The process of emphasizing clear and accurate documentation to prevent disputes, the sale orders, a binding agreement detailing the goods or services, that quantity, the price and the terms, invoices. Once the goods are supplied, the type of a good, the specification of the good, and each unit and the price, and below the seller signature, the buyer signature. So detailed invoice are issued upon delivery of the goods or service, clearly stating the amount due or due date or due date. So these also to be taken into consideration. And prompt, this one is required. and services clearly amount the date, due date, and payment methods. Not only that one, regular monitoring is also. The companies are doing regular monitoring. Once they are given credit, they will do that. Once the others are giving, they will follow the company. Like banks or operational creditor or financial creditor, they will monitor the company. Once the company is giving, they will also monitor. And is a crucial proactive management. Account receivables aging. How many are there? They will split into 1 to 30 days, how many? 31 to 60 days, how many? 61 to 90 days, how many? Above 90 days. That splitting is also there. These reports track outstanding invoice and duration 1 to 30 days or 31 to 60 days past due, helping identify the slow paying clients also. So the companies, these data to be extracted by the IRP or RP from the finance department, and what action the finance department is taking to recover the amount. Once it is recovered, it is useful to settle the claims. If it is a going concern, during say CIRP also, the company has to offer the credit sales. Once the credit sales is not offered, then going concern, it is not possible. It is a continuous process. It is a continuous process. And 30 to 40, the 1 to 30 days and 31 to 60 days, helping the identity to slow the paying clients. Automated reminders. Many companies are using software to send the automated reminders on due date before 3 days. Even today, banks are also, whenever we have taken a housing loan or car loan or personal loan, automatically the messages will come. So next 2 days, your installment is due. Or if at all installment not paid, yesterday your installment due, still not paid, then it attracts a penal rate of interest. Like that, some SMS or emails automatically populate. That type of system is also there in the companies. Personal follow. Some of the people, particularly those who have availed the credit from the company, they don't, sometimes they are not responding to the email, they are not responding to the SMS. In that case, the company will send their executives to go there and ask them when he is going to pay. Like that, during the CIRP process also, if the company is a going concern, the IRP as or RP, whoever is there, he has to interact with the finance department. How many debtors are there? How many account receivables are there? What follow-up you are doing? And age-wise classification. 1 to 30 days, how many? 31 to 60 days, how many? Above 60 to the 60 and 90 days, how many? Above 90 days, how many? And what are the where you have kept that bill of exchange, and what are the agreements you have taken while extending the credit? All these things are to be extracted by the interim resolution professional or the resolution professional by interacting with the CFO if the company is a going concern. Personal follow as it debts age, personal contact, phone calls, personal visit, use it to understand the reasons for a delay, negotiate the resolution. Today, the company is undergoing the CIRP is the company is defaulted. In the similar manner, if my company is also they provide a credit to others, the same situation. I am the operational creditor. So all these things are to be taken care of by the IR. The debtors, the creditors are the big amount in the liability side, and at the same time, The debtors is also the big amount today. And the recovery team, who is the recovery team? Being a IRP or RP, you please address what efforts you are doing. Because value maximization is there. Once you recovered, I will settle the claims, whatever the claims are there. All these things are, or if at all it is a going concern, that the funds are utilized. Always not depending on the interim finance and how many amounts to be paid to the company that you recover. Some other people, they are not bothered about the data. They are not bothered about the account receivables. This is my personal observation whenever I am interacting with the IRP or SARPs. Personal follow, a debt age, personal contact, phone calls, personal visit is to be the reason for delay and negotiation, a resolution. That's fine. The IRP or RP, he is a chief executive officer. He is a full-time official, not part-time. Earning, that's a number of cases, if at all they are handling, it is very difficult to justify each and every company. So he has to interact with the marketing department. He has to interact with the finance department. He has to interact with the production department. The role is the going concern. Going concern means if at all you are there in the company, then only the things will be materialized. Otherwise, once you left the company, morning reported and 1 hour left, nobody will do. Nobody will address the issues or problems. So the debt, age, personal contacts, phone calls, personal visit, all these things are required. Dispute resolution, bad debt management. A clear procedure is a place of disputes also. Uncollectible debts. Once uncollectible is there, you have to talk to the law department of the company or law officer of the company. So that amounts are not received. What action you are taking? If at all it is to be filed with the civil courts, file it. Dispute investigation, which the invoice, goods are provided or addressed quickly to avoid further payment delays. Once the funds are received, it is useful for purchasing raw material. Then the company will be continued as a going concern. Thereby, my dependence on interim finance will reduce. The IRP is a businessman. He is a chief executive officer of the company. And only whatever the visible, the physical assets are there, only that is not even bank guarantees, debtors, receivables, all these things they have to handle properly. Collection agencies, legal action. If internal efforts are fail, the amount of significant, the debt may be passed to the third-party collection agent and the local council. Even today, banks are engaging the services of debt recovery agencies. Whenever they are giving the loans and their officers are unable to recover, debt recovery agents, DRAs, in the similar manner, particularly the credit card companies, like big companies, they are having their collection agents or agencies. They will pass on the information to them. For recovery, they will collect some amount. All these things are to be recovered by the company from the debtors. From the debtors. So once the financial creditors and operational creditors are doing their efforts, why not my debtors? The RBI guidelines ensure that such agencies use fair practices, don't resort to harassment of physical force. Particularly in the banking, we are engaging the services of recovery agencies for loans, and for that also the guidelines are there. They should not talk with the debtor or borrower in case of bank below 8, after 8. They should not arrest. They should not use the unparliamentary language. They should not use muscle power to recover the loan. So like that, the company, whatever the data are there, that is to be recovered properly. That is the purpose of, because here the good system is prevailing. Once the CIRP is there, everybody will escape. What, sir? What collection? What? No, no, no. First, you take the particular, you call the marketing or finance department and a law department. What is the data's position? Why it is not created? What is not? Once the company is in weak, then the data will escape. Collection people also, they don't talk. They simply sit and enjoy. That's why in one case, no work, no pay. No work, rainbow, I think rainbow case. No work, no pay. The NCLAT, they have given no work, no pay. Once you don't require staff, remove. Otherwise, it is a burden. It is not only burden, you have to pay the claims also. Na? I have seen in one real estate company, the IRP take over the company. And on the day one, nearly 6 cars are there, 6 cars. Then IRP asked, why 6 cars? No, that marketing people will use 4. One is for MD and others. Tomorrow onwards, MD is not required. Leave. And who is the one car that is sufficient? Remaining marketing. What happened for the last 2 months? Any sales are happened? No sales, nothing. In that case, 4 cars are also not required. Marketing. Why he called the marketing? How much business you mobilized? No, sir, for the last 6 months, company is in problem. That's why no work, no pay. Remove. Otherwise, it is a white elephant or burden to the company. A clear picture in place handling the disputes and uncollected. And the RBI guidelines are also like that. Write off. But in certain cases where the debtors are not recoverable and the person who taken the buyer, the purchaser or buyer died and no assets are there, in that case, write off. For that, the companies are providing bad and doubtful debts provision. Bad and doubtful debts provision. So, uncollectible debts are eventually write off as the bad expenses after all efforts are exhausted. If all efforts are exhausted, write off. Modern practices. The companies are adapting to recover the data or accounts receivable. Whatever it is there. What are the modern practices? Many Indian companies adopting automation software that is called ERP systems to streamline the entire account receivables process from credit approval to cash application and reporting, leading to greater efficiency and reduce the errors. Today, all are in a ERP. So, being an ERP or RP, most of the companies, they are implemented the ERP software also. About basics, what is a ERP? But in the ERP system also, once you take over the company as an ERP, at the initial stages, first you ask the software, the person, what are the user IDs and password. How many people are accessing ERP? And first you ask them to disable. First to ask them to disable. Once the disable, otherwise what will happen? Once it is in CIRP, everybody will try to change the data also in the computer system. So whatever the software is there, first as an IRP or RP, once you report it to the company, and first we have to go to the system. And what is the user ID? What is the password? And how many people are accessing? What are their rights? What are the changes that are possible? Check it up and disable that one. Otherwise, your valuable data in the computer system, if that is not protected, then there is no physical records and no computer records. How you will handle? So that's why the second one is immediately you have to address the bank also. Change the style of the operations. Whatever the current account, whatever the working capital is there, send the first letter to the bank. Don't allow anybody existing earlier directors. I reported as a IRP to this company as per NCLT order so and so, so and so, so and so, and tell about the banker. Immediately he will stop the earlier instructions, and they will record your signature. They will they record this particular the CIRP process in their records, and they will allow whatever the earlier checks given by the earlier officials or board of directors that they don't pay. So in the system, this is very, very important on the day of reporting as an IRP or RP. Indian companies follow detailed documentation policy for sanctioning account receivables based on the best practices, focusing on creditworthiness assessment, setting clear terms, systematic monitoring, and structured collection process. All these things are there. Once all these things are there, recovery is possible. Once you are not recovering that amount, how you will pay the claims? Or once you are not recovered that amount, how you will continue the company as a going concern? The key guidelines of procedure followed. Establishment of clear credit policy is there. Companies create a formal credit policy, balanced sales growth, and risk mitigation. All are defined in the credit policy. Okay, some sales, credit sales, it will turn into bad. This policy determines the senior management on the board, defines the framework for all credit sales. So this is definitely this practice is there in the company. Credit period is everybody knows about the credit period. Either 30 or 45 days or 32 days or whatever their discussion. That is, it is need not be 30, 60, 90. It may be 30, 35, 40 or 45 like that. Varies from industry to customer type also. And each and every customer limits are there. So-and-so Reliance not exceeding 1 crore. So-and-so Star Bazaar not exceeding this one. So like that, pharma companies also. Because the wholesalers are there, they will ask the credit. If the pharma company supplies, then they will take the bill of exchange from the traders, and they will allow 30 days. Once the pharma company is facing the CIRP, and you have to ask your the CFO to recover that amount, whatever the credit sales that are happened, the maximum amount of outstanding credit to a single customer have at any time. That is the credit limit. That is the credit limit. Discounts and penalties. Terms for early payment and discounts and penalties. That is also defined in the credit policy. Again, at the cost of repetition, I am one time before giving that particular the conclusion of that particular this one, then we will go for the how it is to be handled during CIRP. Discount penalties, terms of early payment, and penalties for the payment are clear stated. Eligibility criteria. The board guidelines, broad guidelines are there. Which type of customer eligible for credit? So whenever banks are giving credit, they will also do this practice. They are also having credit policy guidelines. In the company also, whenever they are giving credit sales, that is called debtors or account receivables, they will also follow the same type, more or less 20% that side or this side. Difference is there. Customer creditworthiness assessment. Before extending the credit, especially large orders or new customers, companies are access potential buyers' ability, history of payment, etc. Then only they will give. Otherwise, they don't simply sanction the loans. Simply, they don't sanction the loans. And methods include they will ask the credit reports, credit information companies like CIBIL or Equifax or Experian or CRIF Highmark to obtain the credit scores and repayment. Suppose one company, Star Bazaar. Now Star Bazaar is Tata, reputed company, everybody knows. But XYZ company, they asked 10 crores stock goods on credit. Immediately the company who is going to provide the credit, they will verify the credit information like CIBIL or Equifax or Experian or CRIF Highmark about the company commercial credit, not individual. Commercial means the company's credit scores, financial statement analysis, they will do. Otherwise, they don't give. Once this type of a process they adopted, then there is a scope for recovery of the debt. There is a lot of a scope is there to recover the debt. And reviewing the customer audited financial statement to gauge their financial health. Trade and bank reference. And sometimes the companies are also, while extending credit to the other companies, they will ask their bankers also, how is the credit information report they will get, obtaining reference from the suppliers or the customers of the bank. And internal scoring. Using internal scoring, small customer based on the predefined matrix. Next, internal, the finance department also, they will develop some scoring for the new or other buyers who are going to take the loan on credit. So that is that type of systems are prevailed. That's why we should not leave it like that, the debtors. Okay, buildings are there, realizable. Plant and machinery is there, realizable. Like that, debtors is or account receivables are also the big assets. And if at all you mention the details in the information memorandum, then the prospective resolution applicant, he will take that particular information, and that information, how many types of people they are going to purchase this product, that information also it is available to the prospective resolution applicant. Not only that one, and he has to give some weightage. That's why even a valuation also, in the valuation also, valuation means not a plant and machinery building. Securities valuation means this one only. How much data are to be realized, investments, how much realized. If the company is invested in bonds or shares or this one, how much realized. The data are also normally 80% should be realized. 80% should be realized. Once this process is adopted by the company, definitely the realization value should be more. So the internal scoring, that to score and clearing invoice and documentation. Every company, whenever they are giving any loan to any corporate, Definitely documentation is there. Once this company obtained loan, the credit from the operational creditor and financial creditor, this company they are giving documentation. Why? In the similar manner, whenever this company is giving loans or credit to the others, definitely the same practice they will follow. If at all the company is in good condition, not facing any CIRP, this company can file an application under 7, the 8 and 9. 8 means first they will give the demand notice followed by as an operational category. This company can file an application on that particular company who are defaulted. So the linkage is there. Invoice are issued promptly and must accurate, detailed, clear about the payment terms, due dates, and accepted payments, and contacted information for queries. This prevents dispute and delays. This payment disputes and delays. So that's why debtors and account receivables are one of the important asset to be handled by the CIR, the CIRP, by the IRP or RP, by interacting with the marketing people, by interacting with the finance people, by interacting with the law officer, by interacting with the collection agents of the particular company. Companies are using system automated through accounting software. Just I told about ERP to monitor the account regularly. The aging report is required. And 30 up to 30 days, how many people are to be paid? 31 to 60, how many people are to be paid? 61 to 90, how many people are to be paid? Like that aging report and key performance indicators, average daily delinquency, how much collection effectiveness index, and evaluate the efficiency of the report also, particularly the recovery account receivables process they will do. The documented procedure pursuing the overdue debts is established. Every company it is compulsory. Otherwise, the company will not survive. Company will not survive. This is must. This is must. Advance reminders the company has to give before the due date, and initial overdues follows. Polite reminders they will send emails or calls immediately after that due date is missed, and escalation, increasing the communication, prolonged delays, potential involving personal approaches by the senior staff or the sales team of the company. They will approach, they have to recover, and a third party environment. Non-payment company may engage the professional debt collection agents, like in banks also, and strict guidelines requirement. These are set by the RBI, not for the companies. It is for banks also. And while trade credit also, business to business, crores of rupees transactions are happening. If at all we are overlook that one, then resolution plan will, maximization will not happen. The IRP or RP, they will not satisfy both the financial creditor and operational creditor at a full amount. And once we are not handling this one, the hair cutting, the particularly haircut will increase. Indian companies with operate a broader the Factoring Regulation Act is also there. The Act provide a legal framework for assignment of receivables, factoring, making the provisions of the registration, business manage liquidity. Some of the companies, they will discount these bills with factoring. But factoring also, they are claiming the claims and they are acting as a financial creditors. So once the factor, how the factor arised, because they have discounted. Why we are not recovering that amount? That also think it of, okay, the factoring will act as a financial creditor, but at the same time, Why the factoring arises? The factoring has discounted the account receivables or the debtors. So why we are not recovering that amount? That question should be arise in the minds of the particular the IRP or RP. Companies Act is also there. The debtors or account receivables to be properly mentioned in the balance sheet. Provisions are also to be made properly. Once the provisions are made properly, then only the losses, if it are incurred, we will set off with the provision. Mandate specific classification reporting standards, trade receivables financial statement, considered good, doubtful, secured, unsecured, like that. Even in banks, standard asset, substandard, doubtful, loss assets are there. Once it is substandard, they are initiating CIRP. But if this company is in good condition, they can also initiate the CIRP on other company, particularly B2B company, business to business company. GST also requires a timely corrective invoice issuance comply with the tax regulations. So once we are raising the invoices and the amount is not recovered, the GST calculations are also not correct. RBI guidelines for NBFCs also, they are following all these guidelines with this one. So this is the Indian companies account receivables and the internal controls, they are following this by the Indian companies. Okay. Any doubts are up to this point of time? Any doubts are there? Any clarifications are there? After that, during CIRP, how we will handle all these things we will discuss. Any clarification? Are you getting my points or not, sir? Madam? Sir, am I audible, sir?
Yes, sir.
Yes,
You are
sir. Yes,
audible.
sir. Audible.
But what I am telling, sir, this is also one of the big asset for recovery. Once the company is in financial troubles, all assets are to be addressed properly. If at all, I'm always looking about the information memorandum about the buildings or plant and machinery or land and buildings, all these things. If at all I have neglected this data, then it is a boon to the prospective resolution applicant. Lot of recoveries will happen. Because once the company is in problem, data says try to escape. Why should I pay? Why not avoid the payment to that particular company? The company is in doldrums, the company is facing CIRP. The debtors are simply keep quiet. Immediately call the law officer and initiate a legal action. Once on the company, somebody is initiated legal action through IBC. Why not normal, not IBC, normal legal action on those people? Recovery agents. In the company, recovery agents are also there. If at all I'm not using the services properly and their payment salaries are waste, even NCLAT, particularly in Calcutta, one shipping company, the CIRP, if no work, remove the people, no the payment wages. Why once the company is facing problem and the liquidity problems are there and no work is there, in that case, why should I continue the employees? It is a private organization. Okay, as long as the continuity going concern is there, going concern full-fledged may not be possible. So that's why the recovery, lot of scope is there, potential is there in recovery of the data. That funds are useful for CIRP cost. That funds are useful for going concern concept. Those funds are useful if at all recovered, that is useful as a interim finance to continue the company as a going concern. Earlier, the company, the board of directors or the management, whenever they are giving a credit sales, lot of systematic approval is there, credit policy is there, and the continuous chasing of the debtors or receivables are there. They have taken the account receivables and all these things are there. Why not we recover that amount? That is also one good opportunity for sources of income to the company. So the IRP or RP should be keep it in mind. For that purpose only this class. Yesterday, the below balance sheet, it is not, bank guarantees are not reflected in the balance sheet. It is a footnote of the balance sheet. If at all I have not addressed that bank guarantees, next security is available. Or the initial margin that is available. It is useful for day-to-day expenditure. So the broad mind, you have to concentrate on the total, the company as a whole, not on particular 2 assets or 3 assets like that. Had I been reported as an IRP, first I will take the last 3 years balance sheet and profit and loss account. Latest. First, after the systems issue is over, I will go to the systems room and I will ask the systems administrator, tell me how many people are accessing the system. What is their user ID and password? First you disable. Then one by one we will allow based on the requirement. Then go to the bank, stop that particular current account or working capital loans. Otherwise, once in CIRP, people will drain out that funds, whatever the credit balance in current account, whatever the unutilized working capital loan in the bank account. Then I have to call the particular, the CFO. I will call the marketing department. I will call the collection department. I will call the law officer. This much data are there. Can I have the age wise up to 30 days, 31 to 60 days, 90 days or above 90 days? And a list of these people. First, you please shoot some letters to all these people by email or SMS. Please pay the amount. Otherwise, we will initiate the legal action against you. So once the ready-made funds are available, that is, that too, this is not a fixed asset, it is a current asset. That too, I have given temporary loans to the buyers. And the buyers are also properly evaluated by me. And I have taken the security documents like the guarantee bond, the bill of exchange or a document. And definitely he will not escape. Definitely 100% he will not escape. So recover, it is as good. If you ask that question to me, it is as good as a balance with the bank in the current account. Once he has taken the goods and uses the goods and not paid the amount to the company, thereby the company is facing the legal problem, that is a CIRP, definitely that he has to pay. Sometimes due to liquidity problem only, some companies are facing the problem of a CIRP. So these areas are to be tagged by the IRP. Then only it is that amount is useful for purchase of inputs, raw materials, if the company is a going concern company. That funds, recovery funds are useful to meet the insolvency resolution process cost. That funds are useful for me I need not borrow the interim finance with rate interest rate. My funds are there with them. My goods are used by them. My manufactured goods are I have sold to them on credit, and they promised within 30 days. So once financial creditor is initiated CIRP on me, at the same time I'm having every right to recover that amount. Otherwise, it is not a principles of natural justice. Otherwise, the creditors are the loser. Haircuts will increase. So during CIRP, how to handle this one? That we will discuss after tea break. Now the time is 4:03. By 4:13, we will meet again. 10 minutes tea break. Is it okay, sir?
Okay, sir.
Okay, sir. Set. During CIRP, how to handle the debtors? Okay. Why I have given a detailed discussion on debtors means you have to handle the debtors properly. Finally, how to handle this debtors during CIRP? First, we should know about what is meant by account receivable, what are the data, what is the process that are adopted by the corporate data. Then, how to handle these account receivables or data during CIRP. During CIRP and a liquidation, the resolution professional or the liquidator address the CD's debtor and accounts receivable by taking into control and custody of these assets. Custody of these assets means the earlier, not only the fixed assets, plant and machinery, etc., but also this also. And actually pursuing the recovery for the benefit of all stakeholders. So you have to recover. Otherwise, the purpose will be defeated. Because you are the chief executive officer of the company with the help of the supporting staff. I'm not asking you to recover by you with the chief financial officer. What is the progress? How many are there? How many companies? Tell me about the companies. When they have given that particular, what type of documents they have executed? And whenever the loan is given, or credit is given to that company, some appraisal is also there. The previous history, the financials, the Equifax or civil rating, all these things are there. Why they have defaulted? Whether the debtors are any related party or once it is a related party, then it goes to the PUF transactions. If at all the related party to the corporate debtor and they have not paid, then who is that person, whether he is a related party or not? That also we have to look into in detail. During CIRP, the primary objective of the CIRP is preserving the assets of the corporate debtor. Preserving the assets of the corporate debtor. And the operations going concern to facilitate the potential revival through resolution plan. And these are to be recovered properly. Taking into custody immediately upon the appointment interim resolution, subsequently IRP take the control of the custody of CD assets. CD assets means including debtors or including account receipts, including book accounts, records, and auctionable claims like account receivables. Account receivables are called auctionable claims. The powers of the board of directors are spent and given to the RP. Then you are the custody, you are the controller of that particular book debts or account receivables. RP manages the day-to-day functions, CD to continue the business. Once they continue the business, you require funds. Why not collect the funds and use for continuity purpose? If at all it is recoverable, if it is recoverable, this involves collecting outstanding receivables in normal course to maintain the liquidity and funds operation. That's why the accounting knowledge is also very much required. Particularly IRP. Complete understanding of the balance sheet. Each and every item. Maximize recovery. Maximization. Whatever the best efforts are there during the course of CIRP, he has to do. Legal action. The RP is the authority to represent or act on behalf of the corporate debtor in judicial or quasi-judicial or arbitration proceeding to recover the debts or enforce the rights, including the bills, receivables or account receivables or debtors. This means RP can initiate a legal action against debtors who refuses to pay. Once the company is in problem, every debtor is escaping. Sir, I don't have the funds. But once you see the history of that particular, whenever 1 crore or 2 crores, the stock is provided on credit to that particular debtor, what is the correspondence? What is the appraisal done by the finance department or marketing department? At the time of extending the credit, he is a great person. Definitely, he will pay. The previous history is good. The Equifax or CIBIL rate is good. Once all are good, what is the problem today? Because he is using the weakness of the company. Weakness of the company. The company is going under liquidation. Nobody will ask. If at all asking, I am also helpless like that. If I given the answer, then they will keep quiet. That type of a mindset the people are having. This means RBI can initiate legal action against debtor who refuses to pay. Information memoranda. The RP includes the details of CD assets, liabilities, including receivables. Receivables means not 1 lakh or 2 lakhs. Crores of rupees. The company, whenever the company is doing business, the credit sales is out of the total sales or the turnover. 60 to 80% are credit sales only. 20% may be the cash sales. 20% may be the cash sales. So you have to mention in the information memoranda, the age-wise, it is recoverable, and what documents you have taken, that you mention, then automatically prosperity resolution. Once I take over the company, I can initiate the legal action. I can recover this amount also. That type of a feeling that is to be generated in the minds of the prospective resolution applicant. So the RP includes the details of CD, assets including receivables in the information memoranda shared with the prospective resolution applicant. But sometimes the debtors list may not be available. Mostly it is available in either ERP or a list of debtors in computer system. Get that information. This allows application formulate the viable resolution plan that might include the strategy for recovery of these debts. While preparing the information memoranda, it is a marketing document. The document should be in all respects, even a small item also we should not leave it. Everything is a cost. Everything is a purchased. Everything is extended credit by the corporate debtor to others also. Every small item is an asset of the company. So that's why we have to mention. Why? Because all these total undertaking we are giving to the prospective, if at all he is winning that particular in the COC or adjudicating authority, finalize the prospective resolution plan. Avoidance transaction. This is useful. He has not given credit. XYZ that swallowed and on book debtors so and so person, but the person is not available in the market. The address is not immediately that is to be mentioned in a fraudulent transaction. So lot of scope is there in the debtors and the creditors for the related party. The look back period is 2 years. The RP investigate the past transaction. Within look back period, identify the preferential undervalue, fraudulent. There is a lot of scope is there in debtors and account receivable and creditors bills payable also. Creditors and bills payable related parties may be there. They have supplied the goods. whether they have supplied or not. Simply the bills receivables, the bills payable, they might have given only bill of exchange, not supplied the goods. Today the company turn into bad, and facing CIRP means that is not overnight. It is over a period of time. That's why the puff transaction look back 1 year or related 2 years and fraudulent, irrespective of the period. If debtors amount was written off, compromise, sometimes anyhow the company is going to face the CIRP. In the meantime, the board of directors, okay, this debtors write off. Write off means their relatives, related parties, they have supplied the stocks. And to disappear, to remove from the debtors, they write it off and close it. Then the balance sheet, whatever the outstandings are there, it is reflected. Why you have, whatever the look back period is there, the forensic auditor has to verify the written off and compromised settlements in the company lost 1 year or look back period 2 years. We have to direct that forensic auditor. Once the company is facing problem and a liquidity problem is there, mismanagement is there, definitely puff transactions are inevitable. And a suspicious transaction, RP can apply to the adjudicating to reverse such transaction to recover the values. Particularly account, because I have supplied 2 crores to my friend worth of raw material of my product to the company. Anyhow, next month the NCLT may admit my application. In the meantime, that 2 crores write off. Once the write-off means it is not reflected in the outstandings. Whatever the write-offs are there, whatever the compromise is there, sometimes 2 crores, you pay 50,000, where the 2 crores, 50 lakhs. I will give that credit 1 crore 50, take it, enjoy. This type of mismanagement. That's why some of the companies, they are facing the problem of CIRP on account of mismanagement. Thereby, the liquidity problem arises, unable to pay to the financial creditor as well as to the operational creditor. And avoidance preferential, okay, this is over. During liquidation also, the liquidator has to verify. If a CIRP fails a liquidation, that is there, RP is typically appointed as a liquidator. The objective shifts from revival to ordinary realization of assets and distribution. And once all physical assets are appearing, one by one, they will sell it, and waterfall mechanism, they will appropriate. And what happened? What action you are going to take for that debtors? The liquidation of assets. The liquidator forms a liquidation which comprise the property auctionable claims of the corporate debtor, that is the account receivables and debtor. Liquidation assets means not only the physical assets like land and building, plant and machinery, etc. Account receivables is a part of the asset. That is to be addressed. Collection realization. The liquidator is empowered to take all necessary legal action to recover the trade receivables and other creditors. This involves pursuing all outstandings debt vigorously. Once the company is in a liquidation, the contributors are unpaid share capital. If at all partly paid share capital is there, the liquidator has to recover. Why not account receivables and debtors? Then automatically we can satisfy number of the claimants. suitable form. Suitably form. If the debt is disputed, uncrystallized, arises from the complex contract issues, the liquidator need to pursue recovery through appropriately arbitration of civil court rather than directly through NCLT. These are not to be addressed by the NCLT. That is your role as a liquidator. You have to get that particular data and bill of exchange, whether it is in a live or not. It should not be stale. If at all some of the bill of exchange is going to be the time barred 3 years or getting to be over, immediately before that, before 3 years, you have to file civil courts or arbitration. Otherwise, crores of rupees. Once the company is unable to pay, others are filing the CIRP. Once my debtors are not paid, I should not leave it like that. I should take the action against that debtors also. As the directors are not there, as the powers are vested, the directors' powers are cancelled, you are the only person with the help of COC, and your super boss is none other than the NCLT. Sales of claims. The liquidator, with approval of the stakeholders, consultation committee, may even sell the auctionable claims. Today, biggest market is there. Everywhere market. Whatever the waste. If at all the company assets are completely damaged, some value will be there. If the auctionable claims that the data are there, sell it. Suppose assignment. Suppose if at all you are giving to me, then I will purchase that one with a less with a discount. Suppose today bad debts are who is purchasing? Banks bad debts or non-performing asset reconstruction companies. Like that for debtors also. That's why I have given one suggestion in this regard also to the IBP. The debtors. If any agencies are there, sell that one with a discount. Don't leave it like that. Then some amount will come. That will be useful for liquidation costs or the CIRP cost or for going concern. The third party public auction or private contract. So you give the advertisement, mention this, these are the debtors, these are the companies I'm going to sell with the approval of stakeholders, the consultation committee, or particularly the COC in case of CIRP. But actually, this is if the prospective resolution the prospective resolution applicant is not willing to take. Otherwise, the total to be given to the resolution profession. Bank account management. All monies realization in the liquidation account. Once these sales are there, the liquidation amount will, the amount in the particular account will be more to distribute it to as much as possible to the creditors. Distribution, the process of the realization of assets, including receivables, are to be distributed to the creditors according to waterfall mechanism. Realization of assets means not the physical assets. Once during particularly during the liquidation, uncalled capital, if partly paid shares are there, one share is there, 100 rupees, first call, second call, final call not required. During and some companies share capital by guarantee or unlimited guarantee, all are recovered by the liquidator. And waterfall mechanism under section 53 of IBC. In both scenarios, the professionals act integrity, objectivity, impartiality, ensuring transparency in working, maximize the value of the asset for the benefit of all stakeholders. If at all I leave it like that, some of the assets you are not selling. If at all I have not mentioned properly, I have not bargained with the prospective resolution about the account receivable or the debtors, he will take over the total company. After that, he will start the recovery of that particular this one by filing the cases in civil courts. They can also seek assistance from local authorities. If suspended management, other persons do not cooperate handling the records of the control of the asset, particularly this account receivables, records are to be provided. In this account receivables, records means the bill of exchange, the invoice, the agreement between the buyer and the seller, that is a corporate data. Somewhere it was kept. Somewhere it was kept. That is to be get it. If these are not available, brought to the notice of the adjudicating authority. And mention they discuss in the COC also. Now, companies, whenever account receivables or data are there, funds are blocked. Once the funds are blocked, they will use different sources to realize that amount immediately. One of the sources is factor. Second one is forfeiting. Third one is a bills discount scheme with the bank. Fourth one is trades, TREDS. Once I have given credit of my sales, the buyer will issue some bills of exchange. Buyer will acknowledge the goods. Buyer will give the documentation. So all these things, I will go to the factoring company. Sir, please discount this one and give the amount. Factoring company, based on who is the data and all these things, they will verify and they will give up to 90% of the total bills. Remaining 10%, once that bills are paid by the data or account receivables, the factoring will discount their interest or service charges, deduct from the 10%, and they will give the rest amount also. For that, factoring will also take some security. In India, most of the companies, they are using SBA global factors. Second one is Ken factors. Third one is the PNB factors, etc., etc. So once the company is under trouble or CIRP facing, the factoring will also file the claim as a financial creditor. Because I have given some loan on your debtors. Factoring companies typically claim their dues during CIRP based on whether the factoring agreement was with recourse or without recourse, which determine the status of the financial creditor and operational creditor respectively. With recourse, without recourse. What is with recourse, without recourse? The factoring company mostly with recourse. The corporate debtor will go to the factoring company. These are the 60 bills I have given on credit. Please discount. The factoring will discount. After 30 days, that days are 30 days credit only. They will take and they will discount. After 30 days, if that bills are not paid, that amount will be recovered from the company, corporate debtor, by the factors. For that, they will take some security also, factoring company. And without recourse means they don't discount. If 60 bills are there, I will purchase the bills and give me 20% discount. If the particular buyers are not paid, the loss will be borne by the factoring company. That is called without recourse. In the without recourse, this factoring company will not file any claim. And with recourse as a financial creditor. And once this is purchased, then what is the consequences and all these things I will discuss in detail. Claim status determination. In with recourse arrangement, the factoring company has the right to recover the unpaid amount from the original seller, that is a corporate debtor in this scenario, in case of a default end by the customer. Once the customers are not paying, he will recover from the company. This type of debt is called financial debt. That is defined under Section 5, subsection 8 and clause E of the Insolvency and Bankruptcy Code. Because transaction is considered to have been a commercial effect, borrowing by the seller for the time value. For the time value. Okay. Claim form. The factoring company must submit a claim form to the resolution professional in the form of a C, proof of claims by the financial creditor. Rights. As financial creditor, the factoring company becomes the member of the committee of creditors. Once he is a financial creditor, whether he may be secured or unsecured, some factoring company, without taking security, they will discount the bills. In that case, unsecured, otherwise secured. Has a voting rights on key decisions, including approval of the resolution plan. Next, non-recourse factoring. That is without recourse. The factoring company assumes risk of non-payment by the customer. If at all the buyer of the corporate debt are not paid, that risk I will take. Cannot recover the amount from the original seller. These transaction considered as the outright sale receivables. So in this case, they should not pay. So whenever the factoring is claiming that amount, you have to verify in the claims whether it is with recourse or without recourse. Without recourse means you should not allow. With recourse means you should allow. So that's why whenever they are claiming, whatever the agreement reached by the corporate debtor with the factoring company, that also you have to verify. Then only you have to admit. The claim form. The claim in this case is treated as an operational debt against the original buyer. If the buyer is a corporate debtor and the factoring company would submit the claim form, proof of the claim by an operational creditor. However, NCLT held certain cases that no dispersal was made to the buyer for a time value of the money. The transaction emanated for the sale, the goods classifying the operational debt. Now, rights. The operational creditor generally does not have the voting right. Even if only 10% of the operation, particularly aggregate dues, 10% that he will do, and he will participate as only the representative in the COC, but he is not having the voting right. And as per waterfall mechanism, we will do it. Claim process steps in the public announcement. Upon the commencement of CISP, the interim result public inviting all the with the proof and specific deadline. Next, factoring company must submit form to IRP also, appropriate form, and along with the supporting documents such as factoring agreement, invoices, bank statement showing the default, and security details. Verification of claims. The RP will verify the claims and determine its status and the amount that he will have to verify. Inclusion. COC, his name is also to be included as a financial creditor. If operational creditor, it is to be included in the list of operational creditor. In the list of operation. So here, two versions are there. One is with recourse, second one is without recourse. With recourse means the company sold goods to the buyer. Company require funds and asked the factor, sir, these goods I have sold on credit. Please discount and give me 90%. Remaining 10%, once the buyers are paid, you deduct your interest or service charges, then pay the remainder. That is called with recourse. On due date, if the buyers are not paid to the factor will recover from the corporate data. It is with recourse. In this case, with recourse, he will, particularly who? The factoring filed an application as a financial creditor. Filed an application as a financial creditor because he has given amount with interest. That too, the factoring is without recourse, with recourse. The second one is without recourse. Once the company has approached the factoring and the factoring, the company told, sir, I will sell the credit sales, that is a debtors and are you ready to take? Yes, I am ready to take. They will bargain the price. He will purchase. Purchase means then the factoring should not claim as a financial creditor. And he steps into the shoes of the operational creditor and he will file the application as an operational creditor, not the financial creditor. In with recourse, he will act as a financial creditor. Without recourse, he will act as a operational creditor. So the inclusion of COC list of creditors, if classified as a financial creditor, the company is included in COC. And if operational creditor, it included list of operational creditor. Without recourse, operational creditor. With recourse, financial creditor. Resolution plan and liquidation. The claim amount is considered during the formation and approval of the resolution plan. If revise fails, the liquidator begin distribution of following the priority as specified. If at all with recourse is a financial creditor, as per waterfall mechanism. And without recourse, you will treat it as an operation creditor. As per waterfall mechanism, he will get the funds. Factoring company must determine the status based on underlying agreement recourse clause and submit the claim relevant form to the resolution provision, ensure proper classification and considering during the CIRP process. So, whatever the agreement is there, whether agreement is with recourse or without recourse, the agreement is with recourse or without recourse. Why we are discussing this one means number of corporate debtors, they are availing the factoring services. In India, the factoring services are also big one. The banks are giving working capital. Factoring companies are also discount the bills with recourse, without recourse. If the factoring company is funded with recourse, financial creditor, without recourse, operational creditor. Commercial paper. This is another area. The commercial papers. Banks are giving working capital. The working capital for stocks and receivables. And for working capital, banks are taking security. And every month, the borrower has to submit the stock statement. The working capital maximum period is only 1 year. Banks are charging little bit higher rate of interest in working capital loans. The working capital loans is a short-term loan, that too 1 year. Every year they will renew. And rate of interest is a little bit higher. That's why most of the companies, they are going for commercial papers. Why I told about this one means, if the company is facing CIRP, you have to address the commercial papers also. Once the company is going for factoring services, either with or without recourse, you have to address the factoring also. Once the company debtors and the receivables are there, you have to address properly. That's why I'm describing the concept and how to handle during the CIRP, both commercial papers. Like working capital, commercial papers, the company is getting the funds from the public, like debentures, bonds, etc. Debentures, bonds, etc. The commercial papers. The commercial paper maximum period is 2 years, 1 year, sorry, 1 year. Minimum is 7 days. And once the company is floating the commercial paper, the people will purchase the commercial paper. After 1 year, the company will pay the amount. If the company is mobilized for 30 days, after 30 days, they will pay. So this is also to be addressed by you. This is also to be addressed by you. So the commercial papers. Now tell me about commercial paper holders are treated as a financial creditor under the insolvency and bankruptcy code and should submit their claims to IRP or resolution provision in the Form C. Particularly if the commercial paper holders are more than 10, the particularly representative is also required. Authorized representative, AR. Like home buyers, we are appointing authorized representative. If the company is going for debentures, on behalf of debentures, authorized representative. If the company is going for fixed deposit, under fixed deposit acceptance rules, the company, that is also they have to appoint authorized representative. And not only that one, bonds. Like that, if a commercial paper is issued by the company, they are also financial creditors. They are also having the voting right through authorized representative. Because the commercial paper will be purchased by 100 people or 200 people. It is very difficult for me to accommodate all the people. That's why I'm an intermediary, one authorized representative I will engage. Next, the authorized representative is required to group of commercial paper subscribers as they fall under the category of clause in creditor. Clause in creditor. Claim process of the commercial papers. What is the classification? Commercial paper represent a form of a short-term debt. That's why I told 7 days to 1 year. Or consider the financial debt. Under section 5, subsection 8 of the IBC, because the amount raised by the against the consideration at the time value similar to the notes or bonds or debentures. So the commercial paper to be addressed. Bonds are to be addressed, debentures are to be addressed, fixed deposit mobilized by the company to be addressed, commercial papers are to be addressed, home buyers are to be addressed. For each series, each class, you have to identify authorized representative. Once the corporate debtor is a big firm and they have mobilized debentures, bonds, fixed deposit, and if it is a real estate, home buyers or commercial paper, the 5 authorized representative into 3. 15 people you have to give in the advertisement and they will select that one. Big companies, this will happen, not small companies. Therefore, the commercial paper holder or financial creditors. Submission of claim. Each CP holder is authorized to submit their claim proof to the IRP or RP in Form C, scheduled to the IBBA Regulation 2016. If less than 10 are there, all are to be participated in the COC meeting. The minimum 10 and above is there, then authorized representative is required. Timeline. The claim should be submitted within the time frame specified in the public announcement made by the IRP. Verification. The IRP or RP will verify the claims, maintain list of creditors, categorize financial or operational. Normally, the verification will be done by the RP only, not by the authorized representative. He is only the facilitator. He is doing as a postman duty. What are the instructions of the RP is there? He will pass on to the class of creditors, and whatever the class of creditors views are there, he will pass on, and voting right, the RP will arrange the electronic form and he will follow up. All these things are there. Requirement of authorized representative. The IBC mandates, particularly appointment of the authorized representative for a class of financial creditors if there is a numerous creditors in that class. That is a debentures, home buyers, like commercial paper holders also, to ensure efficient participation in the committee of creditors. So here his role is also there. So the authorized representative is very much required for commercial papers also, not only for bonds, not only for debentures, not only for fixed deposit, not only for home buyers, for commercial papers also. Today, commercial paper is a big business. And the Reserve Bank of India guidelines are there, how to issue the commercial paper. Companies are directly attracting the working capital funds from the commercial paper. Banks are charging higher rate of interest. Commercial paper is a lower rate of interest. So if you see the western part of the country, commercial papers are more. Commercial papers are also trading in the stock market. Commercial papers are also trading. For that, FIMDA is there, Fixed Income Money Market Derivative Association. Fixed Income Money Market Derivative Association. One self-regulatory organization is also there. Daily, they will announce the commercial paper rates of all the companies. The role of authorized representative. The authorized representative acts on behalf of the entire class of creditors. Their duties include collecting the claims, submitting the consolidated claims with regard to the commercial papers, attending COC meeting and voting as per the instruction prior to the meeting of individual creditors they represent, and circulating the agenda and meetings of the COC to the creditors in their class, or protecting the interest of the class of creditor, guiding in the claim process. So the commercial papers are the class of creditors. One type of class of creditors, like bonds, debentures, home buyers, fixed deposits, etc., etc. Appointment. For commercial paper also, IRP initially identified eligible insolvency professional to act as an authorized representative for commercial paper and obtains their consent. The COC subsequently confirms the appointment. And a single member of the class cannot be individual challenge the majority decision taken by the authorized representative on behalf of the class. On behalf of authorized representative only, that they taken majority of the decision to be taken by the authorized representative. In the essence, particularly to conclude the commercial paper, individual commercial paper holders are grouped as a class of financial creditors and participate in the CIRP through single appointed by authorized representative who exercise the voting right on behalf of the COC meetings. Next, are you getting my point or not, sir? Is there any doubts with regard to commercial paper? Because the commercial paper is also borrowed by the company. If that corporate debtor who is facing the CIRP in that particular company, if at all commercial papers are there, you have to address it properly by following whatever I had told. Any doubt, sir? Any doubt, sir? Only 1 minute, sir. So any doubts are there on commercial paper, sir?
Yes, sir, I have one.
Tell me.
Sir, in case if any in given instance in this class of commercial paper holders, if someone is not agreed with the majority decision, does he have any like legal stand or exit opportunity?
Again, you please repeat that one, madam.
Yes, In this given instance, commercial paper holders, if a majority takes a decision and those who are not has given the like consent or like dissent holders, does they have any exit opportunity or legal stand to oppose
No,
it?
no. Because they have not given vote means they are not contested in the particular decision. So here, take for example, in one company, 2000 commercial paper holders are there. They have contributed each commercial paper 1 lakh rupees. The commercial paper size, not 1 lakh, madam. Minimum size of a commercial paper is 5 lakhs and multiples of 5 lakhs. And nearly 1000 people, they have contributed each one 5 lakhs. That amount borrowed, borrowed by the company. And once the company is facing CIRP, as an IRP or RP, you have to appoint that commercial papers authorized representative by taking 3 names and finalize 1 name. Okay. You have sent one the particular decision taken at COC. And out of that 1000, the 500 people, they have participated in the voting, and 500 people, they have not participated. You have to they take that only those who are not participated, that you the whatever the list is there, that is to be prepared separately, and the authorized representative will simply forward that information to the resolution professional, and accordingly the resolution professional will take a call. How many are how many are agreed for that particular decision, and how many are not agreed, and those who are not participated, then they will take into account that is absent from that particular this one. Here, what is your doubt, madam?
My doubt is regarding, sir, who had not agreed with the resolution, not
That,
about those
that
who are
will be treated
absent.
as an absent, madam.
Okay.
Absent. Second one, the particularly minimum quorum or minimum voting right is required. They accordingly, the decision is based on the percentage of voting that is required for that particular resolution. All these things are to be taken care of by the RP. That is normal in finance, madam. Commercial papers. Who are the commercial papers? Commercial paper is also financial creditor. Even banks are also financial creditor. Those who are lending the money is also called financial creditor. Debentures are also financial creditor. Or bondholders are also financial creditor. Whatever the procedure you are following for the secured creditor are the same to be followed for unsecured creditors like commercial paper or fixed deposits or the bonds or the debentures, etc. The same procedure to be followed here also.
Okay, sir. Sir, in your given instance, as you have discussed, 1000 commercial holders were there.
Correct.
500 had participated. Out of, I'll continue the example. Out of 500, 300 had agreed, as and they have given their consent. What
Correct.
about the 200 shareholders?
200 is to be treated as absent or away from that particular decision.
Okay.
That, madam, here also, each and every commercial paper holder is having voting right percentage. Suppose one bank has given particularly 1 crore, 2 crores rupees. But that bank, the voting rate is 40% for 2 crores. For 2 crores. Example, for 2 crores, 40%. But one commercial paper holder, 5 lakhs, only 5 lakhs. What is his voting rate? For a 2 crores, 40% means, for a simple calculation purpose, for 5 lakhs, his voting rate may be 5 lakhs 20, 40. That 20%, his rate is 20% divided by 40. Like that, that 20 divided means 0.5 like that it will come, madam. 0.5% voting rate. Voting rate also we will give to the commercial papers. Voting rate also we will give because they are the financial creditor. And voting rate is small portion, small point, sometimes 0.5 or 0.25 or 0.30 like that it will come. They're also financial creditor. Bankers are having crores of rupees, they are giving money to the corporate debtor. That's why their voting rate is 20 or 30. But they're small, each and every commercial paper, we will give the voting rate percentage. It may be 1% or it may be 0.5% or it may be 0.25%, etc. And these percentages who are given that percentages we will add, whether it is 66% is there or in case of a withdrawal 90 is there, we will calculate accordingly.
Okay, sir. Got it. Thank you so much, sir. Highly obliged.
Now coming to trades. Today, corporates are selling their account receivables or debtors to the trades. That is the exchange. The exchange will purchase the account receivables or debtors from the corporate debtors. So what is it, trades? Some rough idea. Because here, why we are including total whatever the balance sheet items are there, you should be masterized, sir or madam. So they earlier, nobody knows about a commercial paper. Example. But if at all in your company, commercial papers are there. I have not listened commercial paper, how to handle commercial paper. And if at all in your company trades are there, some claim came, what is this trades? It is not there in the balance sheet. Why it is like that? The people will also, particularly the people who are handling that CIRP, they should know the micro level, the various concepts that are there in the profit and loss account as well as a balance sheet. And in case a CIRP happened, how to address this liability, how to address that asset like that. So the trades. What is the trades? Trades is operating online receivables discount platform for facilitating short-term financial transaction in a smooth and efficient manner for the following participant. Suppose I am the company, I am the corporate data, and I have supplied nearly 50 crores worth of stocks to the Amazon. But Amazon told after 30 days only I will pay. I am manufacturing some goods, so that goods are I'm selling through Amazon, 50 crores across the country, different stores I have provided. Amazon given the bill of exchange. And I have prepared the invoice and Amazon accepted, and they have taken agreement, and they told after 30 days we will pay the amount of whatever the goods are supplied, 30 crores example. But 30 crores funds are blocked. And immediately, if at all I have waited for 30 days, 30 days for 30 crores, then in the meantime, operations will stop. Immediately, I will approach the trades. Sir, this 30 crores I have provided, I have they given credit to Amazon, and please purchase this 30 crores. In India, 3 exchanges are there. They will purchase that weapon. And they will purchase 30 crores. 30 crores means, okay, 30 crores for 30 days. 30 days means if at all they paid within 1 month, the rate of interest I am incurring this much, they will deduct, okay, 29 crores I will pay. Another one, 28 crores like that. Another exchange, 27. So the 29 pay, who is going to pay? I will sell the trades to them. And on due date, Amazon has to pay to trades, not to the corporate data, who is selling the goods to the Amazon. Once the Amazon not paid, the loss will be borne by the trades. And trades are not to be treated as an financial creditor. And trades are to be treated as an operational creditor. So this the trades, particularly in MSME, it is there in India. And MSME sellers, particularly MSME corporates, and budget logic, the corporates, they will buyers, and the financials, banks will purchase the trades also. Tomorrow, once a trade claim under operational creditor by the bank, State Bank of India is also purchasing the particular trades, that is debtors or account receivable. And once State Bank of India filed that particular under operational creditor form, and that 30 crores means, what is this trades? Why the State Bank of India purchased this bills? That doubt will arise. To avoid that one, I am giving a rough idea about trades. In the trades, 3 people are registered. One is the buyer sellers. Second one is the buyers. Third one is the financiers who are financing under the trades. What is the process? The seller, the corporate debtor, will send the goods to the buyer. That is to Amazon. Amazon raises the corporate debtor will raise the invoice on Amazon. The buyer Amazon receives the goods and quality check. And Amazon open that platform, trades platform, and view the invoice, whether the invoice price and terms and conditions all are correct or not. Then the Amazon will verify the invoice and accept the payment online only. This is all are online. And the invoice moves to the financials. Immediately, once the buyer accepts the invoice moves to all the banks. Banks are ready to purchase that bill. Whoever is quoted the lower rate of interest, they are the winners. Financials are able to view the invoices accepted by the buyers in the platform. And particularly financials, they will quote, I will purchase with the rate of interest this one. Bidding window closes. Quotes are visible to the seller. And seller will accept whoever is quoted the lower, and financier winning the bid, and immediately the financier will pay the amount to the seller, that is to the company, that is corporate debtor. And on due date, financier will recover the amount from the particular operational the buyer. If the buyer is not paid, the loss will be borne by the financial. And in case the company is under that particular this one, that is the CIRP, the financial will claim as a operational creditor, not a financial creditor. Because once the operational creditor not pay, the buyer is not paid, he is an operational creditor, and if the financial will steps into the shoes of the operational creditor, and the claim will be raised by the financial creditor as an operational creditor. Financier, not financial creditor. Financial will become the operational creditor. For this, 3 people are to registered, only MSME corporates. And buyers are also all buyers. And NBFCs. Take for example, Reddy Labs are there in Hyderabad. Surrounding Reddy Labs, 100 MSME corporates are there. So Reddy Labs are all, they will not manufacture some bottles, some cardboard box, and crores of rupees they are supplying the raw material, and Reddy Labs will sign the bill of exchange. Then these SMEs, they will upload the invoice in trades. Immediately they will get the funds. Once they get the funds, they gain that useful for the raw material, etc. In India, 3 exchanges are there. Receivables Exchange of India, Mayond Solutions, and A-Trades. For these 3, the 3 people are participated, and finally the financials are purchased the bills. Once the purchased, that buyers are not paid on due date, the financials steps into the shoes of the buyer and as an operational creditor and submit that claim to the corporate debtor who is facing the CIRP problem. This is in brief about the trades. Discounting trade spills without recourse. Why? Because without recourse, once the trades are purchased by whom? The financials. Once the loss is there, loss will be incurred by the financial. He is not recovered that amount from the corporate debtor as a financial creditor. But once it is not paid, as per contract, he will steps into the shoes of the operational creditor, and as an operational creditor, he will make the claim to the corporate debtor. But if at all you are having some knowledge about this bills discount, all these things, it is easy to understand. Otherwise also this is easy, but a little bit first time you are listening, some communication issues may be there. So discount, this type of today, the trades, all companies are using trades. Once the financials are claiming under operational creditor, what is this? He is a financial creditor. He should claim under financial creditor. And once it is a financial creditor, then he will participate in COC meeting. Like that, some doubts will lingering in your mind. But once you see the process of the trades, once the buyer is not paid, the financial will steps into the shoes of the operational creditor. As an operational creditor, he will file to the corporate debtor who is undergoing the CIRP process.
Sir,
And
here
without
I have-
recourse, tell me.
Yeah, here I have a doubt. What is the difference between then factoring in and this trades?
Correct, sir. Factoring without recourse and the trades are one and the same.
Okay.
Correct. And factoring, trades, and forfeiting. Factoring without recourse, trades without recourse, forfeiting is also without recourse. What is meant by forfeit? At this moment only, I will tell what is meant by forfeit. There is a difference between factoring and forfeit. Normally, factors will use with recourse only. Normally, the factoring. But forfeiting means without recourse. For export bills, if the companies exported the goods and they have given some credit to the importer, that bills are purchased by the Exim Bank, that facility is called forfeiting. The purchasing. Once the Exim Bank purchased, then if the importer is not paid, the loss will be borne by the Exim Bank. The corporate debtor need not worry. But in this case, particularly CIRP, once the importer is not paid, then the Exim Bank steps into the shoes of the operational creditor. And as an operational creditor, Exim Bank will file the claim to the IRP or RP. Are you getting my point, sir?
Yeah, thank you.
So in that case, I need not discuss about this one, because without recourse of factoring or trades also without recourse, and forfeiting also without recourse, in these three, whatever the factoring without recourse, the same formula to be applied here also. Next, this is the last point. Today, all corporates, they are enjoying a bills discounting facility. This is with recourse only, not without recourse. With recourse only. For giving the bills discounting, banks are taking collateral security. Like factoring with recourse and bills discounting by the banks, are one and the same. Factoring with recourse and banks with the bills discounting, both are one and the same. So the bills discounting facility limiters with the banks. So this is also another area. While handling these cases, if at all you come across what is this bills discounting, why they are claiming, means whatever the debtors and account receivables are there, these block they will go to the bank. Sir, I have given credit. They told that 30 days credit. In the meantime, for manufacturing all these things, I am having some liquidity problem. I request you please discount, give the 90%, and whatever 30 days interest is they deduct from the 10%, and whatever your service charges are they deduct in 30, after the 30 days you pay the amount. And these people directly, particularly the buyers, will pay to the bank. And if the buyers are not paid to the bank, bank is having every right to recover from the corporate debtor. For that, corporate debtor is offering security to the bank. That is also to be taken into consideration in the information memoranda, and whether it is properly addressed in the resolution plan, or in case of liquidation also, whether these items are properly addressed or not, that is to be ensured by the IRP or RP or liquidator, like that. So this is also like a factoring, like that. And a categorization bank filed the claim resolution plan. All this things similar to the factoring with recourse. So the concepts why today I have discussed this concept means debtors is or account receivables is one of the major asset. The land and buildings one asset, plant and machine are also an asset, but along with the current asset, that is account receivables and debtors also one of the potential asset for recovery purpose. But if this is not visible, it is invisible by way of documentation, bills of exchange, invoices, etc. So these bills receivable or account receivable are to be handled by the finance department. And whenever the credit is given by the company, they are having certain guidelines also, that is called credit policy. The credit policy to be approved by the particular the board of directors of the company. If the company is facing the particular CIRP process, being a IRP or RP, what is the total amount of debtors in the balance sheet? How many debtors are there? How many bills receivables or account receivables are there? Please get the full details from the finance department or CFO, Chief Financial Officer. He will provide the list. And whether it is a B2B or B2C, business to business, big companies or business to company, crores of rupees funds are blocked there. And whenever these credit is allowed, marketing department recommendations, finance department lower level recommendations, and CFO will finally sanction, allow 10 crores to Star Bazaar or 10 crores to Reliance or Amazon or Reddy, like that they will give. And the total amount, how many people are there? You ask them to bring all the bill of exchange and invoices and whatever the documentation they have given. Then you ask the CFO also, how many bill of exchanges are given, whether the due date is over or not, what is whether they are 3 years going to be completed or not, and who are the recovery team in the company, what efforts they are made, and all these things, if you are thoroughly verifies, then some good results will happen, recovery will happen. Otherwise, the debtors or account receivables, they will escape from paying the amount. Why? Because everybody, outside people, oh, that company is facing the insolvency or liquidation. So whatever might dues are there with the company, so I don't want to pay because they may write off. Like that, some feeling is there. So that feeling should not arise. We have to recover. There is no other alternative. Some of the debtors, before starting the CIRP also, the earlier board of directors, they will adjust those things. If at all they sold any relatives or friends 2 crores worth of goods, before CIRP commencement, they write off with this one, or they will discount heavy discounts also. These are to be mentioned in PUF transaction, preferential undervalue, fraudulent and extortionate transactions. So for that purpose, second one, while verifying this debtors or account receivable, related party how many are there, unrelated party how many. That the CFO, with the help of CFO, or the similar names, or why, how long we are supplying this, or how long we are providing credit to this, all credit history is available in the company. And today, most of the companies, they have started the ERP, Entrepreneurs Resource Planning software. The full details are available in this software also. Today, physical books are rarely they are maintaining. Some companies, most of the books are on RAM only, random access memory of the computer. So after reporting at the company, the first job to be done by the IRP or RP is first call the systems administrator who is handling the computer system of the company. Go to the system, block all the user ID and password. Otherwise, today what is happening is some of the unscrupulous persons, they will change the data, they will erase the data, all these things. And the backups where it is available, all these things that is under your custody. It will not occupy any space because it is a hard disks and other things. And once this data is there, with the help of the systems administrator, we can identify this type of transactions. And today, the systems man is very, very important in the complex. And that's why I want to disseminate this information with regard to account receivables or debtors. And because while interacting with my colleagues, they told, what is the data, boss? What is account receivable? What is commercial paper? I don't know all these things. Don't tell like that. You are the professional. You should know. And once you are handling that particular small things may not arise these issues. Big companies, definitely it will arise. So that's why I have taken that initiative and I want to disseminate the information to the professionals. Thank you very much for your kind patience listening yesterday and today for 3 hours.
Thank you, sir. Thank you.
Thank you.
Thank you very much.
Thank you,
Thank you,
sir.
sir.
Thank you very much. Thank you.
Thank you, sir.
Thank you.
Thank you for your knowledgeable and interactive session.
Now I am closing, madam.
Shivaram, sir, you are an asset
Yes,
for the
Thank you,
profession.
Sir.
Wow.